So good evening, everybody. So one of the things I want to share with us is what we call is something that we're going to be exposing ourselves to in the coming refresher course. Like I said, in the refresher course, we're not going to be having, when we say something is a refresher, right? It means something is you are being refreshed. You are refreshing your memory on some things, right? So we're not going to be treating some things that we already have the video access, we have access to the videos in the main course videos, right? So we're just going to try as much as possible to simplify it to what we need, right, in our journey as much as possible, right? Every time, let me borrow Isaac's word, and which is true. It's not just because I'm borrowing the word. Every time I think of the community, right, and I'm really like, oh, what really can we do to ensure that nobody's left behind? At the end of the day, the elders have a saying that it is the child that uh, it is a child that lifts his hand, right? It is a child that lifts his hand that the elders will carry, or something like that, right? So, as much as we want to try to carry everybody along, only those that are willing and ready to be carried down, at the end of the day, that will be carried. Also, today's session is going to be a bit of technicalities, but I'm also going to be talking about something called plug and play. So we're going to be talking about plug and play, right? So what plug and play means, and I'll share with us how it has helped me a lot, right? In fact, I think Q2 for me was better than Q1, right? Just this May alone, I mean, what I've done personally, trading this May alone is really amazing. Right? So when we talk about plug and play, which is very important. So when we say the term plug and play in trading, what does it mean? It says in trading, plug and play typically refers to a system, a strategy, a tool, or setup that is ready to use immediately with little to no configuration required. Are you seeing the word that was used, or the words that were used? With little to no configuration required. It's designed uh, now. It is designed to be user-friendly and efficient, right? Uh, Especially for traders who may not have the time, technical skills, or desire to build something from scratch. But majorly, what plug and play actually means is that plug and play just simply refers to a system or a strategy that is ready to use immediately with little to no configuration. So if we exchange the word configuration, you can exchange the word configuration to refinement, right? When you have little to no refinement about it. So it's a ready to use system, right? And the reason why I'm talking about plug and play with us before the refresher course is because I still find it very funny, right? It still bothers my heart to see that people are still struggling to find their edge, right? With all of the simple informations that we have already that we have shared, people are still finding it very difficult to find their own system. I mean, owning your own particular system, people are still finding it difficult to own it, and it bothers my heart. So that's why I'm talking about plug and play. So in simple terms, plug and play in trading means you can start using it right away. I mean, it's a system or a strategy that you've been able to come up with that you can start using. Just plug it in and trade. So when we talk about the examples, let's use the second one, right? The first one talks about a bot, all right, trading bot, right? But the second one is where I really want to emphasize on a pre-built trading strategy that comes with clear rules, indicators, and risk management settings. Just apply it to your chart. Apply it to your chart. That is what plug and play actually means, right? That is what plug and play means. And that is how I approach trading, right? So what that means for me is that when it comes to, so why is plug and play used? It means it saves time, it reduces complexity, ideal for beginners or busy traders. Now, not necessarily, not like I don't do any other job aside full-time trading, right? And all of that. So every of my other time is spent like doing something else, like maybe personal development or whatever it is, right? So now, if we left our job, our 9 to 5 jobs, right, to focus on trading because we wanted to have the freedom. Now, if the primary purpose for us leaving our jobs is to get freedom from trading, we now have to ask ourselves a question: why do we have to sit on the chart Monday to Friday for 24 hours, right? The moment you find yourself sitting on the chart 24 hours every day, it means you make wrong decisions, take trades that you're not supposed to be taking, find yourself revenge trading, right? You find yourself making some kind of mistakes that will keep you in circles for a very long time, right? Which is something that we don't want to do. So that is why I love to use the term plug and play, right? So plug and play, just have it at the back of your mind. Plug and play simply means you have a system already that you own. You've owned that system. You own the thought process. And what you just have to do is it comes with clear rules, indicators, and risk management settings. You just apply it to your chart, and we are good to go, right? So now, so most importantly, right? So when we talk about, let's now talk about plug and play. How do we apply plug and play to the chart, right? So um, I want you to pay attention, right? And this is where many people are finding it difficult, the ability to own your own particular system, right? So plug and play actually starts with you being able to, have like a defined thought process. The moment you have a defined thought process in the marketplace, it doesn't change. It doesn't change. So before we go into what I want to share with us, so if you look at this particular trade, is I had like a in my free time yesterday, um, I had like a call with Chucks. Many of us know him. His name is King Chuck. So you can see all his students took the trade, right? You can see all his students took the trade, and the reason why they took the trade, I took this trade as well. This UGPY was because of what I shared with him as well, right? I shared it with him, so you can see. Uh, so you can see the plug and play. So yesterday, myself and King Charles were talking about plug and play. So this is where I'm going to simplify it for us. So you can see. Let me look for. Yeah, let me look for very simple. I mean, it was a very simple stuff. So, okay. So let me open this one. So you will see. So you can see from here. You can see very simple stuff. From here, just share it with this community, guys. And that was not, I mean, it was just based off what I was able to share with him yesterday over the chat. So he came to me and asked me, he said, I don't know what's happening. I mean, I've been having a lot of, he said for a while, he has not been really taking some trades. And just take only one trade in 2 weeks. I was like, okay, this is what is wrong. And I shared with him the concept of plug and play, right? So now, when it comes to the subject of plug and play, the first thing first you want to be able to define is that you want to be able to have like a solid thought process when it comes to the subject of building bias. If you don't, and I've been emphasizing it, right? There's no point you trying to learn anything new. You don't need to learn anything new. I'm telling it to you, I'm putting it to you for a fact. You only keep yourself going in circles every day, every week, every month, every year, right? What you want to train yourself to do is that you want to train yourself to have a consistent approach to building bias, right? And you must be confident enough, right? You must be confident enough. So personally for me, I was looking at EuroGPY. So I was telling him, I said, okay, there are two ways we actually build. There are two ways I personally know, right? The same thing I shared with King Chat is what I want to share with us when it comes to the subject of plug and play. So what I do is I told him that there are two ways I build bias in the marketplace, right? I use key levels, and I also use the concept of single candle formation as liquidity to be able to build bias, right? Now, I've said it to us many times in the subject of storylines and entries combined. I told us that when it comes to the subject of building bias with key levels, right? If we want to build bias with key levels, for example, we have an A-shaped key level right here, right? So what is my thought process, right? Me, I'm only looking from the weekly down to the daily. I need the daily to be in alignment to the weekly, and I'm just paying attention to the most recent breakout in 4 hours, or paying attention to what the 4 hours candle is, the 4 hour candle formation is doing. So many a times you'll find out that me personally, I'm not sitting on the chart every hour. I'm not sitting on the chart 24 hours, right? The moment I see that the daily is already in alignment to the weekly time frame, I'm paying attention to what the current 4 hours time frame is actually doing. And when I see that 4 hour time frame is, I need to wait for the current 4 hour candle to close before 4 hours is in alignment to the daily. I will just go ahead and do something else with my time. I could read a book, I could listen to a sermon, I could even go back and sleep a bit, or I could just get some food or see a movie or whatever it is, right? Within that time frame that I'm waiting for the 4 hour time frame 4-hour candle to close. So now, when it comes to the subject of my top consistent thought process, like I said, I told him that when it comes to the subject of plug and play, to me, I build bias first with key levels, and I also build bias with what we call the single candle formation as liquidity. So if I'm building bias with key levels, right, it's simple. I want to see the that A-shaped key level rejected, candle closes below, which is very important, right? So we want to see the rejection, we want to see the candle close, right? The only difference between building bias with key levels and liquidity is that for key levels, we want to see price reject from that particular level or close below it. When it comes to the subject of liquidity, we don't want to see rejection. What we want to see is a sweep. We want to see price take out the previous weekly high, and we also want to see that the previous weekly high is going to be standing. So price is going to take out the previous weekly high, and then it's going to close below it, leaving for us this particular previous weekly high as the next possible target that price has to take. Which means that the moment we see that we are taking the previous weekly high, I'm going to be looking for selling opportunities that will lead the momentum to the downside. That is why you will find out that I am okay taking 1 or 2 trades every week, right? I'm okay taking 1 or 2 trades every week. And I love to follow the momentum. I love to see that if price is going to go in this direction on the weekly and the daily, that I know that the momentum is going to be heavy to a particular direction, right? Regardless of maybe strong speaking, regardless of it will still go in the anticipated direction, right? As long as the daily is in alignment with the weekly, right? So on the weekly time frame, I'm paying attention to when I'm building bias, I'm paying attention to these two things, right? I'm paying attention to the weekly reject, weekly close below. Then I also, if I don't find a key level that price is rejecting from, I would only go to straight to the, I will use liquidity to frame my bias. So let's say price takes out liquidity, right? Price takes out the previous weekly high. I want to always see that the previous weekly low is going to be standing, right? So we want to see that the previous weekly high has been swept price that's close below. Now, the moment I see these two expectations met on the weekly time frame, the third expectation that needs to be made. So, what are the two expectations met on the weekly time frame that I want to see? Price rejects from the weekly key level close below, or price sweeps a previous weekly high close below. Then the third expectation is that I want to move straight to the daily. So we have this on the weekly. Then the next thing I want to do is I'm going one time frame over to the daily. Daily has to give to me two major expectations. It's either daily gives me a sweep of liquidity and a break of structure to the downside, or the daily is going to give to me a breakout to the downside. So this is my entire thought process when it comes to building bias. Very simple. I'm not doing anything different, right? When it comes to this is happening on the weekly and this has happened on the daily. The only thing I'm going to be looking for now is my entry. So when it comes to the subject of entry, I was telling King Chat, I was showing him I have a handful of data on this thing. Many of you, we've said it before, right? But I have a handful of data on what I'm talking about. So I was telling King Chucks, I said, after building bias and I'm looking for an entry opportunity, I love to play key levels, right? They are called confirmation setups, right? I love to play any key level, for example, right? Now listen to this now. I love to play a key level, for example, that got disrespected, right? That is also overlapping inside of an imbalance, right? It has liquidity resting above or below it. So we call it continuation setup, right? So I love to trade. I love to take setups like this that are called continuation setup, right? I love to play uh, key levels, A-shaped key levels that get disrespected, or V-shaped key levels that get disrespected, overlapping inside of an imbalance, and also has liquidity above it. So, but there's something I said. I said I have a handful of data on this, but this is what I want to say. I was telling King Charts, I told him yesterday, I said, see, when it comes to the subject of entry, right? I don't just play key levels, right? What I consider high probability key level that got disrespected, that is overlapping inside of an imbalance. I said I also love to see that A-shaped key level, right? This A-shaped key level that got disrespected, and I'm telling you, go and spend at least 1 hour tonight after this call to study this thing I'm showing to you, and keep data and see for yourself. I told him that I don't not just A-shaped key levels that get disrespected and is overlapping inside of balance. I told him I love to see that A-shaped key level, that A-shaped key level must have sponsored some level of sales, right? That A-shaped key level must have sponsored some level of sales to the downside. Then it gets disrespected to the upside with an impulsive move. So now for me now, we can share similarity in our thought process, right? When it comes to building bias, but we might not share the same similarity when it comes to entry. So that is why I taught us about learning to own the system. The moment you have found the system, you must learn to own it. You must pick it and make it yours, right? So now I told him, I said, when it comes to the subject of plug and play fund, building bias to entry. For me, the moment I see the price, the daily is in alignment to the weekly, and now I'm looking for entry opportunity. I love to see that this A-shaped key level here has sponsored some level of sales before price has rejected from here. It gave to us some heavy momentum sales. It might not be like deep momentum sales. Right? Price gave to us some level of some sense of sales. Then after that, then that same level gets disrespected to the upside. The moment that particular level gets disrespected to the upside, now I begin to incorporate I begin to pay attention to how liquidity is going to be formed. I'm going to share it with us now, right? And once again, big credits, we give credits to Isaac that you open our eyes to it, right? So now, the moment we see that the A-shaped key level has sponsored this particular level of sales to the downside, then we had this, it got disrespected to the upside. And now, most importantly, I love to see that that same level is also overlapping the interleft and imbalance, because I've said it over and over again, and nothing has changed. That the market has just two major responsibilities: to attack liquidity and rebalance and hold imbalance at a specific pricing level. So price is always coming back to rebalance holding balances. But what asks ourselves, at what pricing level do we want to see price come back to rebalance, right? So now pay attention to this. So the moment I see that this A-shaped key level has sponsored some level of sales, got disrespected to the upside, and I can see that that A-shaped key level is overlapping in terms of imbalance. The next thing I'm paying attention to, which is the most important, which is the last on my plug and play list, is that I want to see how the liquidity is going to be formed. So the first thing first, I'm paying attention to what Isaac has shared to us a very long time, like not like long ago. So I'm paying attention to two things. I'm paying attention to this single candle formation, right? Now, the candle that was responsible for this breakout to the upside, the candle that was responsible, I'm talking about the candle that was responsible for this breakout to the upside that disrespected this A-shaped key level. Now, when it comes to the subject of liquidity, I want to see that the next candle that is going to form after that candle that breakout is resting inside the breakout candle, right? The moment I see that it's resting inside the breakout candle, the low of that particular candle is for me is going to serve as internal range liquidity. Then overall, I'm targeting the overall external range liquidity. So what do I expect price to do? Liquidity has now been set. I expect price to satisfy the two market conditions: attack liquidity, rebalance and hold imbalance at a specific pricing level. What pricing level? A-shaped key level that sponsored some level of sales got disrespected and also overlapping inside of imbalance. I want to see price take it out, come back to that particular level and continue to move to the upside. Now there is another part of liquidity, right? This is another part that I have a handful of data about, right? Sometimes you will find out that, right? So now let's say we have this particular candle that was responsible for. Can we still hear me? I hope I'm not speaking to myself.
Yes, we can hear you, sir. I hear you loud and clear.
Thank you so much. So let's continue. So the second way I want to always see liquidity form for me is after I see that all of these conditions has been satisfied. A-shaped key level has sponsored some level of sales, got disrespected to the upside, also overlapping internal from imbalance. So I'm paying attention to the candle that led to the breakout to the upside. Right? So let's say this is the candle that led to the breakout to the upside. It has its high, it has its low, right? The weak high, the weak low. So now one of the things I'm paying attention to is there's an imbalance here that needs to be rebalanced, and also there's an A-shaped key level that is overlapping inside of that imbalance. The next thing I want to pay attention to is I want to see how internal range liquidity is going to be formed. Sometimes now you will now figure out that price will sweep this particular, let's say this is a 4-hour high, price is going to sweep this 4-hour high. Now we're expecting price to actually retrace after sweeping the 4-hour high to take out this 4-hour low, because after the high is taken, the low should be next, right? But because of this, price is going to sweep the previous 4-hour high, then it's going to close like this. External liquidity has been taken. It brings us, this is just a cumulative of what we call the basics of market structure. Right? Let me repeat something on the basics of market structure. When price gives to us in a bullish trend, we call it higher high. Right? After every higher high is taken, we're expecting a reversal. After every higher low is taken, we're expecting an expansion, which means in the basics of market structure, every higher high is going to serve as external range liquidity in the bullish structure. Every higher low is going to serve as internal range liquidity. What that means is for every external range liquidity, which is the higher high that is taken, we want to see some sense of reversal or retracement. For every higher low that is taken, we want to see some sense of expansion to the upside. So if you take that single little information from the basics of market structure and put it into the subject of liquidity, this is the candle that was responsible for the breakout to the upside, right? So sometimes the way liquidity is going to be formed before price moves in the intended direction is that the previous 4-hour high might be taken, then price will now price will reverse, give to us some sense of reversal. right? Then create the weak low, only for it to do what we can call it an engineered liquidity or internal range liquidity. So now the conditions has not been satisfied, right? What is the condition? External range liquidity has been taken, we have reversed. And after reversing, this candle has closed. It means that this particular candle is going to serve as internal range liquidity. So what does that mean? For every external range liquidity that is taken, we had a reversal. Then the reversal will now lead to us to take out the internal range liquidity, which is the liquidity here. Then price will come back to rebalance its own imbalance at that specific pricing level. Then we want to see price continue to go to the upside. Now, the beautiful thing about it is that this particular candle took out the external range liquidity. And after taking out this external range liquidity, it also served as internal range. Price took out the internal range. The high of this particular candle serves as our new external range. So what do you expect price to do? Take that out and continue to move in the intended direction, right? So, like I was saying, for the plug and play for me, right? The moment I see that a key level, the moment I'm able to establish my bias from the weekly down to the daily, I see that the daily is in alignment to the weekly. It becomes easy for me. There's only one thing I'm just looking out for. I'm checking from. I'm not looking for entry from the 1 hour first after the daily is in alignment to the weekly. I'm checking from. I'm going to be scaling from 4 hours down to the 3 hours, down to 2 hours. And when I see that, oh, 3 hours is even the cleanest, I will set my limit from 3 hours and I'll just go about my day. Only for me to come back and find out that, oh, this trade has even activated, right? And sometimes it will get activated in the middle of the night, only for me to wake up in the morning and see that price has moved in my intended direction. And there are times I wake up and I see that this is the loss already, or I could see that price is still dancing around my entry, or maybe price is in the loss or in the drawdown, before it does whatever it wants to do, right? So you see, the moment I see that, for me, the way I now begin to approach my plug and play is that the moment I see that we have an A-shaped key level that sponsors some level of sales, God is respected to the upside. I'm going to be paying attention to how the liquidity forms, right? Paying attention to how the liquidity forms, right? So that liquidity that forms, right? Like I said, the liquidity that forms, the first one I'm paying attention to is I want to see the candle that was responsible for the breakout. If internal range liquidity is going to be created inside of it, if internal range liquidity is going to be created inside of it, I know what we already know what to expect, right? But if price does not create internal liquidity inside of it, many a times you're going to see that price is going to take out this external liquidity, right? Then give to us some sense of reversal, right? Then create internal liquidity close to the nearest key level. Sometimes if the key level is not there, you see that price will take out external, then come to take out the 4 hours internal liquidity before moving to the intended direction. Solely depending on where the key level is at, right? So now the primary purpose of me talking to us about plug and play is that after tonight, right, I want you to go back and simplify your approach. Go back and look at your notes. Go back and look at your journal, your trading history. Check which trades has given what what setup or system has given to you more wins than losses, right? Many of you, right? Somebody reached out to me from the inner circle and said that it was after he listened to the recording on owning the system that he now went back to his journal. I love it when people do stuff like that. I love to hear things like that. He said he went back to his trading journal and he didn't know that his trading system was screaming at him. Right? As he went back to his journal, he saw the setup that gave him consistent wins. He saw the setup that was giving him losses, and immediately he just said he knew what his setup was. That this is it, right? And he was able to sort it out, and he's doing very fine for himself right now. So the primary purpose of plug and play is for you to be able to own your own system. You're for to be able to own your own thought process. Say if weekly rejects weekly, close below, daily must give to us two major expectations. Daily must give to us a liquidity sweep or break. Daily must also give to us, a institutional breakout to the downside. Right? And I've taught us already. Sometimes, let's say this is the weekly time frame. You must be flexible in your approach when it comes to building bias or stimuli. Let's say price rejects from the weekly time frame, right? The two major conditions that must be satisfied from the weekly, right? So now we have weekly rejects weekly close below, only for you to come to the daily, and daily has not given to you a breakout, or daily has not given to you a liquidity sweep and break. But many a times, if these two expectations are not satisfied, pay attention to that same weekly key level. This weekly level, pay attention to it on the daily. You find out that the daily came back to that weekly level at least 2 times. Rejected twice, close below. Right? So what does that tell you? Because the candle is saying the candle tells stories. Our ability to be able to listen to that, to the story that the candle is telling us, it helps us to solve the problem. So let's look at it in this example. I tell people that it is very easy to solve mathematics questions. The moment you know how to interpret the answer, interpret the question, you have solved 70% of the problem already when it comes to mathematics. So when it comes to the subject of trading as well, the moment you are able to interpret what the candle is doing, right, 60 to 70% of the problem is done. What I'm saying is that there are times that price will reject on the weekly time frame. When you come to the daily will not meet these two expectations, which is either a breakout or a sweep of liquidity and a break of structure. The moment you see that these two major expectations are not met on the daily, pay attention to the weekly key level that price is rejected on the weekly. Find out that many times daily came back to that level at least twice, rejected, closed below. And after closing below, when you move on time frame lower from the daily, go to the 4 hours. These two
Ẹ̀yin ò
expectations
rí
that
ṣọ́ọ̀ṣì yẹn ò
sorry,
ṣiṣẹ́. Mo ti ó tan fóònù rí.
please mute yourself now. Why are you people behaving like this? Can we hear me?
Yes,
Yeah,
please,
I hear you.
sir.
Yes,
Yes,
sir.
So the
Yes,
moment
sir.
you find out that, okay, let's continue. The moment you find out that the daily did not give to you these two expectations, and you find out that the daily had rejected from that same weekly level twice, right? I'm going to the 4 hours now. The two expectations that were not met on the daily, when I come straight to the 4 hours, I must see that the two expectations must be met. One out of the two. So that daily 4 hours gives to me a most recent breakout, or the 4 hours gives to me a sweep of liquidity and a break of structure. The moment I see all of this, I'm looking for my entry opportunity, right? The thing is, we can build our bias together. We can have the same thought process when it comes to trading. And I've said it, trading is a solo sport. We don't necessarily have to have the same entry. We necessarily do not have to have it, right? So now, this is what I'm trying to say to us. So if you look at what, okay, let me use uh, there are many examples. I have a lot of data. So if you, okay, I think this is NAS. This is NAS on the 4 hours time frame. So let's look at this, right? So if you look at NAS, like I said, every time you can see that we have this particular big imbalance here that needs to be rebalanced, right? So we are not just going to randomly say we want to see price come to rebalance the imbalance at 50%. No, it doesn't just work like that, right? Price is going to come to a specific level, and we want to know exactly why price is actually coming to that specific level. So for example, this is the internal range liquidity that was created. This is the external range liquidity that was created, right? So price came from internal range liquidity. After internal range liquidity, we had an expansion to the upside. Price took out external. From external, price started to reverse. But why? We now begin to ask ourselves questions. Why did price, after sweeping liquidity, because you can see, I told us that the market just has two major responsibilities: to attack liquidity, rebalance, and hold imbalance at a specific pricing level. So we ask ourselves a question. We have liquidity resting inside of this imbalance, right? So if price is going to sweep this particular liquidity and rebalance this particular old imbalance, we now have to ask ourselves, what key level are we going to see price play? So you can see I marked out this particular level. Look at this. Now, the reason why I chose this particular, okay, I think it was not from this particular point. Right? The reason why I chose this particular level is this. This is a two consecutive candles to the upside that created a bullish open close that sponsored all of these buys to the upside, right? All of those buys, right? Sponsored all of those buys to the upside. Got disrespected with an impulsive move. The beautiful thing about it is after I got disrespected with an impulsive move, it came back to use it again. When you see how price came back to use that particular level for sales, and after using it for sales for a very long time, price disrespected it again to the upside with an impulsive move. Now, the beautiful thing about this is that that same key level is overlapping inside of an imbalance. And there's also a liquidity that is resting above it. So it has to satisfy the two major market assignments: attack liquidity, rebalance and hold imbalance, but at a specific pricing level. So we know the pricing level. Why did price come back to that particular level? Bullish open close that sponsored the buy, got disrespected. We used it for a sell to show you how that bullish open close was very strong until price disrespected it to the upside. The moment price disrespected it to the upside, it was also overlapping the side of an imbalance. It has liquidity resting above it, right? This. So when you look at, so you can see how price goes from internal to external range liquidity. So when you look at, for example, gold, when you move straight to the daily on gold.
Can I ask, please, on the last trade?
Hold on, hold on. So when you look at gold, right, you can see what gold did. I want you to pay attention to what I'm saying. So this is like a playbook. This is the plug and play. Sorry, this is the plug and play when it comes to entries. So what did you notice here, right? This is the daily. When you move to the line chart, you can find A-shaped key level, right? A-shaped key level sponsored. You can see this level of sales to the downside, right? You can see how this A-shaped key level sponsored the sales, got it respected to the upside, also overlapping inside of an imbalance. So we have an imbalance that needed to be rebalanced at a specific pricing level. So we ask ourselves a question: why is price coming to this particular level, right? If price is going to rebalance this whole imbalance, at what pricing level is price going to come back to? A-shaped key level that sponsors some level of sales, got it respected to the upside with a passive move. Price closed above it as a body. Price came back to that particular level and we now began to have buying opportunities, right? So when you see what price did, now, if you didn't get in on this particular buy from here, how do you interpret this particular chart? Just by using the subject of single candle formation and like I've taught us. This, in a bullish market condition like this particular low is going to serve as internal range liquidity. This particular high is going to serve as external range liquidity. So what has price done? Swept this liquidity. Can you see how we closed above? I told us about building bias with either key level or liquidity. So we swept the previous daily low, we closed above. The previous daily high is still hanging, right? As much as we know that the previous daily high is still hanging, right? We wanted to now begin to look for trading opportunities. So that was where I got my first buy from, knowing fully well that this particular daily high is still standing, right? And also you can find out that there's an imbalance that is going to serve as a magnet to price. Or let's just say now we have another external range liquidity that needs to go here. So my first trade on gold for this week came from this, just by simply understanding where price came from on the daily. And when you look at the 3 hours time frame, you can see how the 3 hours is in alignment. We had a lower low, lower high, a lower low, a lower high, a lower low. We had a break of structure. And the moment we had a break of structure, we had a little bit of reversal and all of that. So on the 3 hours time frame, so this is what I wanted to do, right? So if you look at this particular candle, if you pay attention to this particular this minor structure here that was created, I want us to finish your time. So if you pay attention to this minor internal structure that was created, when you move to the line chart, you can see we had a lower high, a lower low, a lower high, a lower low. We had a break of structure to the upside. This was the particular candle that was responsible for the break of structure. So you can see that every other candle that we created that is going to serve for us as internal range liquidity, we are inside this particular candle, right? So for me, it was a very easy one to know. I just placed my limit here. I placed my limit at this bullish open close. Then internal range liquidity is resting here, right? That is going to serve as my internal range liquidity. That's market engineering by itself. So I came up, checked it in the morning. I saw that price had moved. Okay, price has already started moving to the missed entry. It's simple. I just came straight to the 30 minutes. I said, okay, let's pay attention to the 30 minutes if we find anything. So this was where I got in on my own entry. So on the 30 minutes time frame, you'll find out that we have an A-shaped key level that got disrespected to the upside. A-shaped key level that got disrespected to the upside, closed above it as a body. This one does this level now did not sponsor any sell. Price was disrespected. And the moment price came to that level, I had to use market execution. Exactly the same level. Put my stop loss just below this low, and just for you to go and come back and see how gold move, right? Your take profit has been hit. And all of that. So, but I'm taking us back to something, right? Back to the daily on gold. Back to the daily on gold, so you can see what I was talking about, right? You see where price came back to A-shaped key level that tested, gave to us some sense of sales. got disrespected to the upside with an impulsive move, and we can also see that particular level overlapping inside of the imbalance. Fine, right? We expect that price is going to come back to that particular level and give to us some momentum buys. So what did we now do on Friday? When you come to the 4 hours time frame, this is where flexibility comes in, right? So when you come to the 4 hours time frame, the same way we interpreted this daily chart. How did we interpret this daily chart here? We swept the previous daily low, previous daily high is still standing, which means that we need to see price move to the upside to see that the previous daily high is going to be standing, right? So when we come to the 4 hours now, if we use the same thought process, right? Like we said, plug and play to be able to interpret what the 4 hours is doing. Because this was Friday's trading, you can see the momentum to the upside, right? So when you look at this Friday's play, this was this. We swept the previous 4 hour low, right? And after sweeping the previous 4 hour low, the previous 4 hour high is still standing, right? So we didn't just sweep the previous 4 hour low. Look at this. After sweeping the previous 4 hour low, price created for us an A-shaped killer on the 4 hour time frame, right? We created an A-shaped killer on the 4 hour time frame. The beautiful thing about it is, how do you interpret this? This was the candle that led to the sweep of the previous 4 hour low, and the previous 4 hour high is still standing. So what did you find? If this is the candle that was responsible for that sweep, can you see how that same candle, right, is inside it? This particular candle is inside this particular candle that was responsible for the sweep. Also, you can see how it is resting close to the B-shaped killer. So price came to sweep this, liquidity came back to the B-shaped killer, and it just price just moved. Price just moved, right? So you will find it. So if you look at the same example, I got, you can see. Now let's build this EURJPY, right? I expected some sense of sales, right? Because I built the bias from the weekly time frame, right? So it was as simple as knowing fully well that when you look at the weekly time frame, we have key levels that price rejected from. We also have what we call internal range liquidity that price rejected from. So let's build bias a bit from here. So you can see from here, two consecutive candles to the upside created a bullish open close that got disrespected. So I saw how price was rejecting here, right? So price was rejecting at this bullish open close that got disrespected. And the next thing I wanted to do was move to the daily, right? So there's, like I said, there's only one thing you want to see that price is going to do on the daily time frame. So what do you want to see price do? Price must meet your expectations. So if you remember this particular level I marked is a weekly bullish open close that got disrespected to the downside with that pulsing move. When I come to the daily time frame, you see how the daily was brushing that particular level. Pay attention to that particular level. This is the weekly level. It got disrespected how many times? One, two, three. Then it used it for buys. Look at this. Used it for buys day one, day two, day three. So we bought properly. Then it got disrespected. The beautiful thing about it is price is not just disrespected, right? It is also overlapping inside of an imbalance. So we know that there's an imbalance here that needs to be rebalanced, right? So if that imbalance needs to be rebalanced, we ask ourselves at what pricing level. So what level did price give to? What level do we know that we are sure that price was going to sell for? See, A-shaped key level got disrespected like one, two, three times, got respected, used it for buying opportunities, bought, then got disrespected to the downside. And you can see it is overlapping inside of the imbalance, right? So knowing fully well that it's overlapping inside of an imbalance, it was a pure. So this is now the interpretation of liquidity. We swept the previous daily low. We swept the previous 4 hour low. The previous 4 hour high has to go. So you know that we started to reverse from here. So we swept the previous 4 hour low. Then 4 hour high has to go, right? Uh, Previous daily low, sorry. The previous daily high has to go. And price came into that particular level and dropped. So now, how did I find my own entry on the 3 hours? How were we able to find our own entry? So knowing fully well the odds and seeing what price has done from this particular level that we marked out on the weekly time frames. Okay, fine. What is price going to do, right? When we come to the 4 hours time frame, you can see the 4 hours is already in alignment with the daily, right? You can see this, we have higher high, higher low, and this higher high, and we have a break of structure, right? So you can see the break of structure that price have to tell us that 4 hours is already in alignment with the daily time frame. I hope I'm not talking to myself alone. Are we still together?
Together.
Yes, sir. Yes, sir.
So how did we
Yes, we
get
are
it? How
together.
did we get an entry on this? So the next thing we can find is that this was the particular candle that led to the breakout to the downside. We also have an imbalance here that leads to the balance, right? So now let's investigate that imbalance and see. So when we move, that is the 4-hour time frame. Move to the 2 hours, we move to the 3 hours. We can see how the imbalance now has gotten bigger, right? The imbalance has gotten bigger. When we move to the 1 hour, I'm looking for something. So let me use the 3 hours time frame. The 3 hours time frame, you can spot this particular A-shaped key level, right? A-shaped key level that got disrespected to the upside with an impulsive move. Price used it for buys year one. This is very beautiful. Use it for buys year one to this point. Use it for buys year one to this point. Got disrespected to the downside. When we move straight to the 1 hour time frame, you can see how that particular level is overlapping inside of an imbalance for 1 hour. And it becomes clear to let you know that that same level on the 3 hours, on the 1 hour is sponsored buys again, got disrespected, overlapping inside of the imbalance. So what did price do? Price ultimately came to satisfy the two market conditions, right? I check liquidity, rebalance, and holding balance at a specific price. Look at this, just one candle was above, right? Just one candle. For me, this would have been my take profit. I mean, I'll just check my phone out. Price has hit TP. So all of this, right, I was able to pass it on to, within a space of 20 minutes, I was able to pass it on to someone else just by understanding the system called plug and play, right? Plug and play, I know what I'm looking for when it comes to entry, and I have a consistent thought process when it comes to building storyline. But if I don't have a consistent thought process when it comes to building balance and storyline, right, I will just take any level I see, I'll just do whatever I like, however I like it, and the result is not going to be matching. Do you understand? So you can see this. So we're going to go back to that now. Someone wants to answer questions. If you look at USDCHF as well, USDCHF, I think, please mute your mic now. It shouldn't be a hard thing to do at all. Just mute your mic. So USDCHF, right? I didn't take it, but I saw something. So USDCHF, I think let me use the text. No, let me use 1 hour. I'll find what I'm looking for. Thursday, 22. I think it was from yesterday, so I'm just going to use 30 minutes. I'll be able to find what I'm looking for in 30 minutes, right? Yeah. Okay, yeah, I found it. So when you look at before all of these reversals today, which is Friday, you can see all of this move to the upside, right? Now let's pay attention to what price did, right? So we are using the plug and play. We've been able, let's say for example, we've been able to build our buyers from the weekly and the daily. We know that we're going to look for buying opportunities. Only for us to come to the 30 minutes, we find an A-shaped key level that price respected, sold. The week of this low, the reason why the low of this week is formed here was because we sold to that point before we started to reject to buy. Right, so you can see this A-shaped key level sponsored sales from this point down to this particular point. Now pay attention to how we disrespected it to the upside with a repulsive move, closed above it as a body, right? Then we have that same level overlapping inside of an imbalance, right? You can spot the imbalance that is there resting there. That same This same A-shaped key level is overlapping inside of an imbalance, right? And the beautiful thing now is that we have liquidity that is resting close to it. So how does plug and play come in? The moment I see that liquidity is resting very close to this particular level that sponsored some sales, got disrespected to the upside and also overlapping inside of an imbalance. Plug and play just tells me, set your limit, set your stop loss, go about your play. Come back after like 2, 3, or 4 hours and see what price has done. There are only two expectations you will see in that regard. Did that price has hit your TP or still going in the direction of price is taking it out. Right. So if you look at what price did, A-shaped key level sponsors some level of sales from this point to this point. God is respected to the upside. That A-shaped key level is overlapping inside of an imbalance and also has liquidity close to it. So it tells us that price has just two things to do: attack liquidity, rebalance, and hold imbalance. So We now ask ourselves a question because I believe solely that nothing in this market is random. Why did price come back to this particular point after we had a break up? We had this breakout to the upside. This particular candle led to the breakout to the upside. Why did price come back to this level? Two consecutive candles to the downside created a bearish open close. Sold. That was what made price to sell into this particular level before price continued. So what did we have? Two consecutive candles to the downside created a bearish open close. The bearish open close sponsors some level of sales to this point. God is respected to the upside, waiting for price to come back to that same level. I mean, price came back to that same bearish open close level. It just showed. But are you getting my point, guys? Are you getting me? So on the third on Euro JPY. Okay, I've shown us on Euro JPY. So gold. So I took gold buys today, but I left early, and I have my reasons why I left early. So this was what framed my balance for gold buys today. I'm looking for this now. So if you look at what we have here, right? Look to the left, move to the line chart. You can find an A-shaped key level that got created with image and likeness, right? So let me use it like that. So what did you notice here? This A-shaped key level sponsored these sales like this to this point. Then it got disrespected to the upside. Possibly shows that both it as a body, overlapping inside of an imbalance. You can see our price rejected twice from them and just moved to the upside. That's how the market feels to that extent. So know where we came from. A-shaped key level has sponsored some sales, got disrespected to the upside. Possibly overlapping inside of an imbalance. Plug and play, boom, from entry down to the exit. Right? So this is like what me I'm looking for. If I don't find, I know that there are times that there are levels that will be overlapping inside of an imbalance, right? That also has liquidity above or below it. It can, what's the word? It can hold. But for me, if I because I want to keep track of how many setups did I take this week? What made me take it out? I want to keep track of all of that, right? So I'm going back and I'm saying, yes, I'm not just consistent in my thought process in building balance, I'm also consistent in my execution. So when I look at my trade history, I know that I've taken 5 trades or 6 trades in a month or 7 trades. And at the end of the day, all of those 7 trades or 8 trades or 6 trades were consistent with my play, with my plug and play, which is my approach, right? Key level that has been tested for sales, got disrespected to the upside, volatility of imbalance, right? And all of that. So you need a plug and play, right? Go and check the setups that you have taken that has given you more wins, right? And you remember what we read about it. You can see what we read, very, very correct. It said it's a strategy that is ready to use immediately. It's little to no configuration. And I told you that you can substitute the word configuration for refinement. I mean, little to no refinement. Just like this Euro GPY, there's no point trying to refine anything. What are you refining here? We already have this issue. We already have a key level here of the 30 minutes that sponsored buys one, sponsored buys two, got disrespected to the downside, overlapping inside of an imbalance. Price came definitely to balance the old imbalance and at a specific pricing level. Price just worked and just true. Right? Is it clear? Everybody does it. This is 11:32 already, right? Okay, so
Yeah, wait.
who's speaking?
Can you check 3 hours on this UJ?
Yeah, I'm holding it for already, sir.
Uh,
So you can see the 3 hours now, very clear, right? A-shaped key level that sponsored buys one,
yeah,
sponsored it
that's
two.
it.
What?
No, that's this year. That is what I consider as my entry.
Which one?
At the like just at the center of okay, no,
This one, this one,
yes, 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 that one.
this one.
Yes, sir, that one.
Yes, yes, that can go as well. That's a beautiful one. Thank you for pointing it out. That can also go as well. V-shaped key level, you
That
can
is
see it's sponsored. What?
some bike. That is the kind of key level I mark when they
Yes,
sponsor
yes,
some bike.
yes, yes. It makes a whole lot of sense as well, right? The key level, the V-shaped level, yes, sponsors a level of cells. To this point, God is restricted to the downside of the positive mode. We have liquidity resting very close to it, right? So let's tap into that level. Just dropped for us. Yes, we just need one candle because we just need to see that that circle is complete from internal range down to external range. The pilot makes it right? I hope we were able to learn something, and that is something I wanted to go and work on. Your plug and play, right? You must have something consistent thought process. Let me see. Whenever price is moving irregularly, drop it to your key level. The moment it uses the momentum it uses to come broke those previous movement. Always understand. So MJ, right? Let me just take one question from MJ. Go and build the bias yourself for NAS.
Thank
MJ,
you. Yes, you've answered my question.
I've answered your question.
Yes.
Somebody shout power.
Power.
All right. All right. So right. So go back and see. I tell you sometimes you just need. I think we are done, right? Let me just round off on that note. So I'll stop recording so that I don't like the videos too long, so that people can listen to